When you think of Disney, what comes to mind? Mickey Mouse, Marvel, Pixar, or maybe your childhood? But behind the magic and the fairy tales lies one of the most complex and challenged entertainment empires in history, the Walt Disney Company. From theme parks to streaming wars, Disney has built a global media kingdom worth hundreds of billions. Yet in 2025, its stock isn't soaring like its magic carpet. It's struggling to regain investor confidence. So what's really going on with Disney stock? Let's explore the company's story, its finances, and whether this once magical empire can rise again. The Magic Kingdom begins. It all started in 1923 when Walt and Roy Disney founded the Disney Brothers cartoon studio in California. Their early success came from Steamboat Willie in 1928, the first Mickey Mouse cartoon with synchronized sound. From there, Disney became the face of animation, pioneering classics like Snow White, Cinderella, and The Lion King. But Walt Disney was more than a storyteller. He was a visionary. He dreamt of immersive worlds where imagination came alive, and in 1955 that dream opened its gates, Disneyland. Over the decades, Disney expanded far beyond animation, into television, cruise lines, and resorts. Then came the era of acquisitions: Pixar 2006, Marvel 2009, Lucasfilm 2012, and 21st Century Fox 2019, transforming Disney into a global entertainment powerhouse. The streaming dream. When streaming became the new frontier, Disney didn't want to be left behind. In 2019, it launched Disney Plus, instantly becoming Netflix's strongest rival. Within just 1 year, Disney Plus attracted over 90 million subscribers, a record-breaking success. Combined with Hulu and ESPN Plus, Disney built a streaming ecosystem with over 225 million total subscribers by 2025. But the streaming war is brutal. Costs are high, competition is fierce, and profitability is elusive. Even with beloved franchises like Star Wars and Marvel, Disney is struggling to balance growth and profit. The challenge now? Turning all that content into consistent cash flow without losing the magic. Disney's financial reality, 2025. Now let's talk numbers. In 2025, Disney's stock trades around $95 to $100 per share, with a market cap near $180 billion. Its revenue remains strong, around $90 billion annually, but operating costs and debt from acquisitions weigh heavily. Theme parks are booming again post-pandemic, generating over $30 billion annually. However, the media and entertainment division, once Disney's crown jewel, is under pressure from streaming costs and declining cable subscriptions. Disney's CEO, Bob Iger, has promised a renewed focus on profitability, restructuring, and strategic content creation. The company is also exploring AI integration, interactive media, and gaming as new growth drivers. But the key question remains: can Disney return to the growth magic of its past? The brand power and future strategy. Despite its financial hurdles, Disney still holds unmatched brand power. Few companies can claim global icons across so many industries: film, TV, merchandise, streaming, and theme parks. In 2025, Disney is betting big on 3 pillars: streaming profitability, making Disney Plus sustainable through price adjustments and ad tiers; park expansion, investing billions in new attractions, including Frozen and Star Wars experiences; content strategy, focusing on quality storytelling instead of quantity. There's also the question of succession. With Bob Iger's extended leadership term ending soon, investors wonder who will lead the next chapter. Meanwhile, rumors persist about Disney's potential strategic partnerships or mergers, especially with tech giants like Apple, though nothing is confirmed. Should you invest in Disney stock? Disney remains one of the world's most recognizable and trusted brands, but it's in a transition phase. Short-term investors may find volatility, Long-term investors, however, may see opportunity. As the entertainment landscape evolves, merging film, streaming, and immersive experiences, Disney still has the creative DNA to reinvent itself. So, is Disney stock still magical? That depends on whether you believe the House of Mouse can adapt to the digital age, and whether its next act will be another fairy tale or a harsh reality check. Because in business, like in stories, even the biggest dreamers need a solid plan.